Hey, good morning. It's Wayne. Let me sip some coffee and then we'll get going. Hey, Forex trader. My name is Wayne McDonald, and I'm super excited to introduce you to the live performance coaching program here at FX Bootcamp. See, I started Bootcamp 20 years ago.
That's me
its
talking.
Core competency has always been live Forex training. This program, it might make you more profitable. It might help you refine your skills, but it will make you more of a confident trader. We need to break all those bad habits and replace them with standardized processes and procedures that give you control of your trading setup. It gives you consistency in the way that you make your trades. And because of this, you're able to identify your strengths and weaknesses as a trader and develop a real confidence in your actual abilities. So how does the program work? Well, the first thing we need to do is set up and schedule your one-on-one personalized coaching call. The second thing is you meet every single day in the live market to learn how to set up your trades properly. And third, every single week, you will meet live to review your trading performance. Again, to identify the strengths and weaknesses so that you can refine your trading skills and build a real confidence based on, the facts. So anyways, join the program. It's your 90 days fast track to confidence and an ability to actually put together actual trade plans every single day. So join or simply get comfortable with the mediocrity. Ouch! Yeah, let's get on with it. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money, cannot afford to lose. Do not get comfortable with the mediocrity. Yeah. So anyways, everybody needs a coach. Tiger Woods had a coach. Michael Jordan had a coach. Wayne Gretzky had a coach. Peak performance. That's what you need. Anyways, hey, my name is Wayne. Been doing this a long time, couple of decades. Right on. There's 5,000 YouTube videos associated with my work. That's more than most. That's above average. Yeah, very cool. I have a background in economics. Very great. I love technical analysis. Great. I love macroeconomics. Love it. Trader psychology. Always working on that. This is a hard gig, huh? Yeah. So anyways, I'm here to serve you. I'm a humble servant. Let me know how I can help, and I will do my best to address that. Please answer the poll so I know what you want and need. As soon as I get 30 on that, we will cover that pair. The first 30 votes get what they want. So please fill that out. And, hey, thank you for the thumbs up and the likes and the comments. Really do appreciate that. Okay. Trader's Way is a broker that doesn't trade against you. If you like that idea, if you like the idea that they have a symbiotic relationship with you, they want you to succeed, that's great. Now you think don't all brokers think that way? In fact, most brokers do not. Most brokers trade against you. That's how most brokers run a business model. They want you to fail. They expect you to fail. They don't, in fact, not only do they not care if you fail, they need you to fail. Trader's Way is completely different. They have a different model. The ECN model is when you place a trade, they automatically, straight through processing, send it into the interbanking system. So they're truly a service provider. And so for them to have a great business model, they need you to succeed. And they said, Wayne, education is something we value because we want our clients to succeed. And I'm like, I love that. I love that. So anyways, Trader's Way, check them out. If you look at the description below the video, there are other resources I made available. over the years. And in fact, I just cleaned it up and updated it. So I should probably, how do I never know what the link is. I did reorganize it, so maybe I need to do this. All right, youtube.com/Forex.Today. All right, so we can do that. And then we go here, and this is what we are doing now. And then we go here, and this is what we are. Well, is that what it sounds like? This is what we are. Testing. Well, is that what it sounds like? Terrible. Testing. Well, is that what it sounds like? Terrible. Testing. Is that what it sounds like? Terrible. Testing. A little better. Testing. A little better. It's muting itself. That's weird. All right. So anyways, I think that's a little better. I wanted to show you this. I reorganized it. I put resources for traders and investors. So there's a link to Traders Way, then a link to Investor Bootcamp, and then a link to QuantBox, and then a link to FX Bootcamp, and then a link to TradePlans.ai. And you're like, dude, that's a lot of stuff. Yeah. And in fact, I might be launching one more other AI service. Oh my God, Wayne, there'd be 3 AI services. Well, you know what? AI is the future. So you either harness the future or you get left in the dust. So I'm thinking about doing one other one that only does technical analysis. And it's pretty. Anyways, then the next section here, free training courses and lectures. Okay, so there's a 90-minute lecture on trading stocks, a 90-minute lecture on fundamental analysis, and then technical analysis over here, which is, there's, I think it covers MACD, it covers stochastics, it covers moving averages, how I use the 5, 8, 21, 55, 200. I believe there's one on Fibonacci, and I think the last one is on pivot points. Oh, for free! And then I bust out my Forex trading book. Very good, and so on and so forth. So it's a little more organized. Oh, so pretty. So I'm going to give myself hearts for this. So the hearts are being broadcast into the chat. Yay! Very cool. So anyways, lipstick on a pig, baby. Lipstick on a pig. Okay, please get your votes out. Appreciate that. While we do that, I will start with start bringing the news. All right. So yesterday I had a power outage. I don't know why, but I got to reload my EpiPen. All right. So yesterday I did the. Oh yeah, I'll show you. Yesterday, you want something else for free, everybody? Okay, you go to Investor Bootcamp. Something else for free. I did the swing trading group. So, that's where the day traders and the swing traders get together, and we do something called the Week on the Street. And what we actually do in that meeting is download all the economic reports that came out recently. And we spent 2 hours going through these reports. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It took us 2 hours. And so the video is not there unless you're a member. Then if you're a member, you just log in. But if you want actual links, so like university, right? You remember UMich? So I covered UMich, and when you click on it, it takes you to the actual report. So if you're going to do the work yourself because you don't want to pay the money to be part of a swing trading group, then at least you can leverage the work that I did, and I've organized what's important, and then I gave you links to all the reports. Even if you just did this manually, that would take you quite a bit of time. So if you want to do that, this is where you go, bro. So that's the Week on the Street. So in the beginning, Let me log in. I don't know if this account has access to the swing trading room. Let's see. It does. Okay. Go to the. It's kind of strange. Not sure why that down into this a little bit. I wasn't able. Okay, let's go back right in the first few minutes. And they would do a separate class to go over what was Aussie. Great. So we'll go through all of that. Great. Rumor on the street is China's going to do something. That's the rumor on the street. It's going to happen. It's going to happen very soon is the rumor. If you go over to... This was yesterday at 4. The stock market. And not... Australia. Okay, I'm going to move the camera again. All right. And I tried twice to actually catch the Hong Kong stock market. But one of the things I wanted to show you before we get going is just like the rumor mill is on the street. It's amazing that the rumor mill shows up exactly when you're on a double bottom, huh? Is it a rumor or prayers? There's someone that bought it way up here and they're like, please, somebody buy it from me, right? So never hurts to do the rumor. But let me drill down into this a little bit. I wasn't able to catch it. Yeah, I'm still in a buy limit. I missed it here, I missed it here, I missed it here. And this big candle, this big green one, now I really have to zoom in so you can see it. That was basically the stock market open. And so I missed probably 3 times little limit orders to get in on that. So I'm not recommending it. I'm just stating the rumor that the government's going to come in and save the stock market. Truly, like some sort of with the intention of saving the stock market. So what would China do? I don't know. How's that? Is the sound there? Yeah. Okay. Sorry about that. All right. So, okay, going back to the video, I think you heard the video. I think the video turned off my microphone. So let's go back. Now my drawing tools disappeared. What the hey? Am I just not seeing it? No. Oh yeah, here it is. All right. So what I was saying is, as I mentioned in the video, which was at 4 o'clock yesterday, the rumor mill was China was going to step in. And I had already explained, I tried to grab it here and missed it, and tried to grab it here and missed it. And now we had the higher high. at 4 p.m. And I'm like, I'm trying to buy the dip. China's supposed to make an announcement like imminently. Okay, imminently. And I've been trying to grab the trade, but I have to be patient. I have to be disciplined. If I'm a bull, I can only buy dips. I can't buy green candles. So anyway, so here we are starting the swing trading group, and I'm like, man, I tried 3 or 4 times and I've missed it. But nonetheless, patience and discipline, right? So you can see what I did is, this is resistance, 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 resistance. And so the idea is buy the dip off the moving averages, off of the roll reversal, and capture the news. And so this was U.S. close. Okay, that's the close of the U.S. Close, right? That's why the swing trading group meets then. And then this is Asia Open. So I did a little front run on a roll reversal, and it worked. That's how you do it. But the thing is, in the swing trading group, with all the day traders and all the swing traders, we're gathered there, and in the first 3 minutes, I'm like, this is what's going on right now. Then we spent the next 2 hours going through news, in particular news from China and news from Australia, looking at how this could change the shape of the market because this is new news relative to what we were doing the day before and the weeks before. Something new is happening in government policy. It's not really, well, part of it was monetary policy. They slashed the RRR, the reserve requirement ratio. But on the other side, there's truly stimulus. And so, yeah, anyways, there you go. That's what we do at Investor Bootcamp. And I have so much fun. And so, well, you can grab the blog for free, but much of the value is in our meeting. Because reading the news report, it doesn't really matter that much, does it? To know that CPI came out 3.9, but everybody expected 3.7. I mean, that's not what matters, right? So we spend our time uncovering what the information that needs to be read between the lines. And in particular yesterday, well, I thought was quite extraordinary, the humanity seen inside the numbers coming out of the UK. We had to look at 2 reports and go back and forth to get a better picture. A report from we looked at the inflation report. I guess, I mean, again, I can just bring this up. So you can do this on your own if you want. I just care that you do it. Investor Bootcamp. It's just easier to do it this way. Blog. Okay. If you look at this one, okay, UK employment, and then you go to this one, UK inflation. If you're able to look at this data and do comparative analysis and be able to read between the lines, it's easy reading. But boy, there was some pretty valuable, I thought, striking information. And so, when you combine these 2 reports together, when you're looking at the human impact of government policy, good intention, bad intention doesn't matter, but the real world human impact, I thought was quite striking there. So that's the kind of stuff that we do, and I love it. All right, so let's see what's on your mind. All right, CAD. All right, CAD 38. Okay, I'm good. Aussie and Kiwi. All right, let me just say, I'm disappointed in your responses. 30% want euro. Almost nobody wants Kiwi and Aussie. You're not reading the market properly. So I don't know who voted euro, but you're not in tune with what's going on in the market. Just so you know, between you and me. I know this is public, but nobody knows who said euro. But you probably trade euro every day, and that's just your thing. You wake up in the morning, you trade euro. But to me, it feels like you're disconnected from the market. So there's my criticism. Remember, I love you. You're my sweet baby. I care about you. But it is the honest truth. So we're going to do CAD today, thank goodness, because if it was euro, I wouldn't have done it. Lalo. But my plan was, euro was the trick. It was a trick response. I put that there on purpose. If you had selected euro as the number one choice, I wasn't going to do it. But CAD is the right play because based on Chinese stimulus, that makes sense to do a commodity currency like Aussie, like Kiwi, or like CAD. Euro, dude, you're so last week. So be careful with that, okay? Take that as positive, negative criticism. Are we still good? Are we still friends? I made some jokes about Canadian politics yesterday, and I got some nasty grams from... So I'm sorry. I'm sorry. All right, so let's do some kitty CAD. All right, let's see what's going on. What's going on? Nothing's right, I'm torn. All right. You're a little lame and I'm already bored. All right, let's, how do we want to measure that? That's great. We don't want an equidistant. We want, let's do it like this. No, I already did that one. Then standard deviation. Let's do that. Okay, so we have linear regression, standard deviation, aka, you're like, okay, Wayne, those lines are not very pretty. Oh, you want pretty. How vain. How vain. Okay, let's do pretty. I'll do pretty for you. Oops, wrong one. Oh, no, we got to get rid of that now. There we go. Let's do pretty for you. Insert indicators, custom, price action pivot points. Where's my PAPP? There, right? Okay, and 55, is that enough? Oh, more than enough. Whoa. So let's do that, and let's add another one. That's long-term long. Indicators, custom, price action pivot points. Let's do another. Let's do another at 21. And, ooh, that one's flat. That's interesting. We should do more than that. Let's do indicator list, price action pivot points, 21. Let's do 34. I just wanted a little more time. Oh, we got to do the calculations. Sometimes it takes a bit. Takes a bit. It actually has to do it. Richard says CAD has a property crisis on the horizon. Okay. There we go. That's what I was looking for. Richard, when you are doing this type of economic analysis to decide whether to be a financial investor, like you're trading the financial markets, you're trading currencies and stocks and options and that and futures and all that, that's too extended, right? Like the property crisis on the horizon due to immigration. You're getting too esoteric. you don't want to go too far fundamentally. But anyways, let's go with this. This is our USD kitty CAD. And this is, let's say, long-term and short-term. Okay, long-term, the trend has been up, but we have new information. Well, we know this is kind of a top anyways. We're not surprised by that. And the big question is, it did turn here. Why did it turn 12 hours ago or whatever, more than that, right? Why did it turn in particular here? Well, this is the news out of China. Okay, almost $1 trillion. What was it, 600 billion, 300 billion? I thought it was 600 billion, so closer to $1 trillion than 500 billion, than zero. Look, if the Chinese economy is making money, well, they're not making it cheaper. They cut the RRR. But so that increases the amount of capital available for investment. So it's not really an increase in money supply. It's just more available money in the money supply for investment. Okay, so that's good. That is a monetary policy. Commercial banks don't need to hold as much cash at the central bank. So now they can keep it in their own vault, and they're going to want to lend it out in the form of mortgages and loans to, let's say, corporations, and that could spur economic activity. And if that does then occur, then these companies that are borrowing the money, obviously they want to be productive. And if they're building stuff, they might need stuff like iron ore and coal, or maybe because they need the iron ore to make steel, but the coal is now needed for the power plants that use the coal to generate electricity that will be demanded by the factory that is now either turning itself on or increasing its capacity and utilization, and so on and so forth because of all of this. Okay, great. The second thing is then the country, in this case, not the central bank, but the central government, then also says, hey, we want to add some money to the economy and push up asset prices, whatever. But all of this either cash available or cash injected may possibly lead to an increase in economic activity, which would increase in the demand for commodities, inputs like iron ore to make steel, but maybe wheat and beef and lamb or milk, because people, whatever. So you see, like this increase and where's all of this stuff going to come from if the domestic economy can't fulfill the demand requirements fast enough? See, that's the thing with China. When I studied China in my energy class that I did at Harvard 2017, we looked at the natural resources available in China, and they have a lot of natural resources. They have enough coal. Now, it's not very good coal. It's what we call dirty coal. And the coal in Australia just happens to be good coal, which we call clean coal. But as far as the amount of coal China has, it has enough. It has a lot of coal. The thing is, they can't get it out of the ground and through the supply chain fast enough. So they need to buy from external sources. And plus, they would rather have Australian coal because the environment is a priority to China. So like when I had lunch with the governor of the Sichuan province in Chengdu back in 2013, I think it was, I asked him, I'm like, what are your priorities? What do you need? And he said, clean energy, clean energy, clean energy, followed by clean water. So for China, it's a very clearly stated desire, goal, focus, drive. And so anyways, if there's going to be an increase in economic activity, they might need to buy natural resources from Canada. I would have chosen Aussie, I think, over CAD in this case, but you guys did CAD. But maybe from that, there could be an increase in commodities from Canada, like maybe oil, natural gas. But I once met a Canadian, and, I always ask people, so what do you do, right? What is it that you do? And he's like, I sell cattle to China. So he was from Alberta, and he would take live cattle, like, I don't know how many head of cattle, 200 head of cattle, I don't know. But he would rent a special 747. I'm not even joking. An airplane. And it was specifically 747, cargo version of it. And he'd put in, 200 head of cattle, whatever the number was, and he'd fly them to China. So it happens. And, well, does he get paid in yuan, renminbi, RMB? No, he wants kitty cat. He wants loonies and toonies, baby. Okay? And so anyway, so suddenly, with that narrative, CAD gets strong. CAD has not been a great performer until suddenly now it could. It could be. And this could possibly be the new direction based on the change in macroeconomics since last night. Interesting, right? Now, you might not want to play the dollar, but maybe you do want to play the dollar. If the stock market's going up, then the dollar's going to be weak, the US dollar, that is, and so maybe this is a great trade. Now, QuantBox, for example, is showing like Kiwi's weak, Aussie's weak, and it has been. That is factually correct. So now you would use QuantBox not to predict something like this, but to measure the change in the flow of capital because of this news, but also the change in the economic consequence of China making this announcement. When does the money hit the economy? When does industrial production capacity and utilization in China go up? When do they place orders for iron ore and coal? Well, all of that we need, right? We need to then measure and test. Now, for those that are that attended my QuantBox meeting this morning, which I did a few hours ago, I gave you a secret tip on how to measure the change in economic activity through high frequency data not covered at QuantBox. Oh, that sounds good, Wayne. Oh, it is good. So if you'd like to know the secret, you want to know the hack, subscribe. Okay, subscribe to youtube.com at QuantBox, and you will be notified in a few hours. It'll launch out right here. Look, see, it's me. Same outfit. That's me. So you can grab your lunch and brown bag it. Do your brown bag lunch and watch it, and I will go through all this in excruciating, sexy detail. Huh? Cool. Hey. All right. Cool. So subscribe, yo. Okay. Hakeem Prince. He's like, hey, man, how does the elections influence the market? I answered that in the Q1 economic outlook. It changes the shape of seasonality, like a change in mass on space-time. A change in mass will change the shape of gravity. Okay? Cool. Is it going to have an impact on the yen? Maybe. All right. So there's that. So this could get interesting. So you're caught in long-term, long-term long with maybe short-term short turning into long-term long. Okay. And this is what you have to notice. This is the news to use because really what's happening is you're kind of getting squeezed into a wedge. And it's fundamental, not technical. Okay? Cool. Right on, huh? Cool. So how am I doing today? Is this going good? Did you click the thumbs up button? Is this good information? Oh, thank you, Jim. Well, if there's a 30% increase in likes, then half the people liked it. We're 30% away from 50%. Wow. All right. What do we know? We're doing CAD. Aussie's been weak, but may not be weak anymore because of what I've been talking about. And CAD, well, also would be positively impacted. So you would expect this to go neutral. But let's look at the past first. M2 predicts M4. That is what we knew on January 1st. If you were trading this pair and you were bearish, all you had to do is fundamental analysis. I don't know if you want to be a bear, but if you were a bear, it doesn't get easier than that. There's your second load. You could reload here on the way down. So if you are a bear, and this is what I teach over and over and over again, you do that or you're not really a bear. You think you're a bear, but you're not. Okay? So anyways, and now what do I teach? Out. Done. Okay? And then with the new news, then we go into this situation where the expected outcome, I don't know what the reality is because I don't know if Australia will benefit more than CAD. Will Australia benefit more than Canada? I would actually suppose so. But now you're picking, stronger versus strong. So I don't like that game. So what you would expect under this new economic regime, if you will, is sideways. Okay? All right? So, be careful of that one. Kiwi CAD should be somewhat the same. Let's, should we take a look? That's kind of interesting, huh? How the breach of that trend. Yeah. This is interesting because you see the technical play. There's our old target. Higher, high, higher, low. If you're going to trade this technically. Now, fundamentally, I don't like it because, again, commodity versus commodity. but New Zealand should also benefit more than Canada. And then you then see the trade. Okay. And you notice that measuring the old high and low, notice that we kind of 618'd, we'll make that a verb. And then it higher high'd, okay? And then we are now using the 50%, but it kicked off the 382, which is interesting. So it did the 618 to 382 to 50%, which then should get you to the 100%. That's interesting. Now, again, it's not a clean trade. Okay, it's not a clean trade because you're trading commodity versus commodity, but it just so happens that I would expect New Zealand to do better than CAD in that deal. And that is a higher high, higher low roll reversal on a 50% retracement with a 618 hold. All right, well, it's interesting. Again, I don't want it to look that good, but that's interesting. There's no doubt about it. So again, then the news to use is like you would expect Canada could benefit from this, but not as much as others. So it's relative. It's good for Canada, but not as good as for others. Now, pound kitty cat, the expected play here is this. Okay, this January 1st trade predicts this price, 172.5. And it's still in play. There's still some up. So I covered pound in great detail last night in the swing trading group. I invite you guys to join the swing trading group. It's at Investor Bootcamp. So you pay the basic annual fee of $88. And then you upgrade to the swing trading group, and that's $99 a month. And we meet twice a week. Twice a week, every week. Okay. Well, Rich is talking about the current account and exports. Well, here's the thing. I suppose it would come in the import data, but not the export data, because you got to input the the material. If you're going to build a laptop, you need plastics, which is a petroleum product. You're going to need steel. You're going to need copper. You're going to need gold. And all the other things that go into the components to making a laptop. Cool. Well, so that would happen before the laptop export, right? But yeah, you might see capital flows out to buy these resources. You might see the actual resources coming in. Yeah, and then you'll see the output, the laptop itself, yeah, getting on a boat or a plane and going out. Okay? Cool. Anyways, neat stuff, right? All right, here's your euro, people. And doing nothing interesting. Okay, nothing interesting. I think we should analyze that this is currently range bound. And in particular, if you're going to, right, remember yesterday I went over the math. I think I did this here. I went over the math of pivot points. So the pivot points are doing a lot of the lifting for you. This is monthly. And pivot points are saying it thinks the bottom is here. Okay? Because it's basing things on what happened last month, right? And anyways, that's where bulls would buy. And this price at 147 is where bears are supposed to sell. So who's trading? Both. Who's winning? Neither. A cup and handle pattern, there's no such thing. What do I mean by that? Why is there no such thing as a cup and, it's going to be economic decision making. And by the way, nobody trades Euro CAD. Euro will happen to be strong. CAD will happen to be strong or weak. And the value of the euro is more impacted by the value of the dollar than any economic monetary policy of the ECB. The Fed's more important to the value of the euro than the ECB. So it's more like, there's not, right? There's some action here, but not much. So I wouldn't trade this because you see a pattern, but you should be, at least maybe on other pairs, making a decision what you want to do here. So if out of the China news, more money goes to Australia and New Zealand, maybe that's disappointing for CAD. Or if oil's coming down, that's disappointing for CAD. And you're like, well, maybe I'm more bearish on CAD than anything. And if we're risk on, so like if the S&P 500 is going to continue being bullish, aka, right, hawkish, we'll say. So if the S&P 500 is going to continue up, okay, then the USD is going to be weak. And if the USD is weak, then euro dollar goes up, even if euro doesn't really change. But this is 40% of the market. So if the market is selling dollars, a lot of it will go to euro. Just because the way that you guys voted, you're like, we all love euro. Okay, well, okay, great, but whatever. So just because the S&P 500 is going on, and this goes risk on, then this goes up, has nothing to do with euro. So all of a sudden this goes up. So you could say, well, if you think the S&P 500 is up, then you would be buying these dips here, and your target is here. Okay. Now, I don't know if that's the right narrative. Maybe the support package from China increases demand for Canadian energy by China. If that's your narrative, this is your selling zone. That's your selling price. Somewhere between here and here. So you're getting ready. You're getting ready somewhere in here. You've already decided up until 147. Okay? Okay? No higher than 147. So it's like if I was your boss and I'm like, give me your trade plan before you make any trades today. You go, okay, if, okay, 147 holds as resistance, then you're going to look to sell. Because your narrative now is the China stimulus package is going to increase global demand for energy. Canada exports a lot of energy, and you expect this to roll over. So if you will allow this to rise as high as 147, if it gets there or not quite there, and then on a smaller time frame starts to roll over, you're going to take a shot and you're going to take it down. Now, I might argue you got the wrong pair, because even an increase in the US economy would increase demand for Canadian energy, because Canada really sells their energy to the US. So if you thought the stock market was up, the dollar would be down. If the dollar's down, euro is up, and therefore this is a mediocre trade. Your narrative will be better traded of stock market up, therefore USD down. That increases demand for energy from Canada, which the United States actually buys. So Canada sells their dollars to buy Canadian dollars to buy Canadian oil. So money flows from the United States to Canada, and you bring it down. That's probably a cleaner setup, but to each his own. Now, can I get a thumbs up? It's not even half. Not even half the people have clicked the thumbs up. Oh my God. I feel horrible about myself. My self-esteem is plummeting right now. I'm an only child. I need love and praise. Yeah. All right, we're almost to half. Well, I'll tell you what. You other half, what do you want? What do you want from me? For crying out loud. Hey, look at this. Look at it. Oh, we just went over this. Oh my goodness. Yeah. We just went over this 2 seconds ago. Nice. Gee whiz. Yeah. Beauty. Apparently it is a cleaner trade. All right. Cool. I love trading, huh? Yeah. Thank you, Richard, for clicking the love button and the like button. I want you to want me. I need you to need me. Yeah. All right. So anywho, let's take a look. We got oh, my power went out yesterday, so I haven't done I haven't changed the time on the microwave. Best thing ever, though, in your home office, put in a kitchen. You won't regret it. All right, so some risk on. Oh, Nazi. Nazi. Oh, Nazi. Right? Oh, Nazi. That is resistance. Oh, my gourd. So, back on the 1st of January, my true love gave to me. All right. A projected top of 70, I can't see this, what, right? 17,545. And we're at 17,543. We're there, dude. We're there. Okay, so bears sell here, bulls buy here. There's nothing else to it. Now, I bought more here, which makes sense, right? Remember that one? Buy, buy, buy. But this is now considered the conservative projected high for the month of January. Thank you, LJK. Okay. Shields up, red alert. Okay, what about S&P, our balanced, what I call my balanced portfolio? Very nearly there, 4,900. We're at 48,888,888. Oh, yeah. We're almost there. Conservative projected high. Okay. And then let's go to a daily. Oh, too far, too far. Let's go back to the daily 4 hour and then I'll scooch it. Where do bears sell? Where are the bears? Bears are here. This is where bears are. Where are the bulls? Here and here. But it's so unbelievably bullish, we're long and gone. So up to at the end of the year, sideways for holidays, boom. Now this is something we've been talking about a lot. And we talked a lot about it last week in the swing trading group, this week in the swing trading group. But this is week 1. This is week 2. This is week 3. Okay? And I've been talking about a false rally Is there an E in there? No. Rally. Spell check. Okay, false rally in the 3rd week of January. For more than 10 years. That's definitely true. Is it 12? Is it 13? I don't remember. But I've been preaching 3rd week rallies in the U.S. stock market and dollar weakness, for example. So for more than 10 years. Huh. Okay. And then what happens next, I think, is related to both politics and the Fed this year. And the Fed's policies are actually impacted by the election, once again. Richard says, do pivot points work on individual stocks? I don't trade individual stocks. I'm a former venture capitalist. When I pick individual stocks, I'm buying the company. So, yeah. The major trades I've made in my life was buying. So I worked at Apple, so I bought Apple stock. I worked at Cisco Systems, so I bought Cisco stock. I worked at NASA, but they don't have no stock. Too bad. I should have worked for SpaceX, but this was 1992, so no Tesla. Were there any other major investments? No. But yeah, I bought Apple stock at $6 a share. Interesting, huh? Yeah, well, I worked for them. I worked for Cisco Systems when it was a tiny little startup. They just got their first buildings, and I was in the executive building. Yeah. Remember John Chambers? He was the CEO of Cisco Systems for probably 20 years. He came by my cube, and he's like, you have 2 monitors. They weren't screens back then. They were monitors. Yeah, I had 2 monitors in my cube. And he's like, that's really cool. Hey, by the way, my name is John. I just wanted to stop by and say welcome to the company. And I'm like, oh, thanks, John. Back in those days. So I've met the CEO of Apple. I've met the CEO of Cisco Systems. And I own their stocks. Yeah. Other than that, not really. I think by the time you get to the public markets, CEOs are incentivized to lie to you. And if not directly lie to you, at least lie to themselves. So, yeah, I don't like that. I don't like picking stocks. So, I don't know. This is my answer, Richard. I don't know. I'd rather flip houses than pick stocks. But I love investing. Right? I sold my Apple stock 25 years later or something. I can't remember what it was. For tens of thousands of percent ROI. I made, I don't know what it was, 30,000% return on investment. That was the first stock I ever bought. How cool is that? Yeah, no, true story. Actually happened. Yeah, actually happened. So there you go. So if you're going to buy individual shares of a company, you might as well be a venture capitalist. Get them when they're cheap. So room on the Dow. So like I'd almost thread the narrative this way. Let's say NASI goes here. S&P goes here. And Dow goes here. And this I almost think like goes a little too high and then gets rejected. So let's make this one an R2. Now, 2. This normally would go to R3. I don't know. I don't think so. I think it's going to play 18 grand. So that gets 18. So that's just a stretch and a drop. And this goes to M4, if I had to guess. Okay, neat, right? Anything else going on? Okay. Oh, it looks like I hit profit targets in some of the trades. Remember, we were on Euro, Aussie, and some Kiwi, and yeah, all right, cool. So it looks like I got knocked out on a couple. But that Hong Kong trade is producing. The CAD yen is still doing okay. Aussie dollar's still doing okay. It's not great. But obviously a change, right? Remember how weak the Aussie was? Now it's showing strength. Yeah, well, we know why. In fact, why don't we bring it up? Why don't we bring that one up since it's directly impacted by what's going on? We didn't get my target. Remember, there's the first trade set up, the second trade set up. This trade that I'm in now is a representation of what your third trade should be. The target is, the long-term target we had 3 weeks ago was down to 65. Last week's trade was down to 64.5. And then what happened is we didn't quite get to target. Then we pulled back for yet another plausible trade. And I think I took this one as well, but it looks like I got knocked out of break even. But now, and this is what a lot of amateurs miss, the narrative may be changing. So everything we had going on here might be gone. And newer traders, they just see the moving average. They just see the old candlesticks. They just see what was. And they miss the point that the world has changed in the last 3 candles. And so, I should have taken profit here, right? Now, this is my coaching account, so I don't mind leaving things imperfect so that you can see the pain and suffering. Okay? So, should I keep hoping and holding on, or should I do the right thing and adjust? Well, watch and learn. The difference is is this technical consolidation like we had before? Or is this a fundamental change? And if it's a fundamental change, one must assume that that is now what is most plausible. We don't know which one is right. Your job, and I want you to hear this, your job is to recognize what's happening by knowing how to read the market. So I'm trying to show you that. And then you must decide here and now which one you are. It's not in your moving averages. It's not in your oscillator. It's in your thought process. What role does Chinese stimulus play in your macroeconomic outlook? Do you put weight to it? Do you discount it? Do you love it? Do you hate it? Do you think it's good? Do you think it's meaningless? What do you think? And then you must, the next part of trading is, then you must develop a tactical strategy to employ your thought process. Should you take profit? Yes or no? Should you re-enter short? Yes or no? Should you prepare for a change in direction? Yes or no? This is your job. This is your life. That decision-making process is your alpha. And if you can get that right, you can handle all the different situations that occur. Okay, the answers do not lie in this chart. Okay, and now your decision-making process should be how to use the chart to employ the strategy you believe is occurring. Like it's scientific methodology. If the Chinese stimulus package will have a positive influence for the demand for the Aussie dollar, then how will you measure and test that hypothesis using scientific methodology on this chart? So I can give you a quick and dirty example, if you don't mind. You say that's a top. We'll count this as a bottom. Drop into a smaller time frame, like let's say a 30-minute, because nobody trades at 30 minutes. So let's just use that as an example. Okay, great. Cool. So you got your range. Okay. This is, okay. Let's label this. Let's label. Let's label. Okay. Okay. Bears sell here. See, I'm appealing to your mind. That's not how you would normally label a chart, but that's what that means. So I'm appealing to your verbal part of your brain, if you will. Okay? All right. Bulls buy here. Okay? Then go to the next one. I guess bears sell here. So now that I'm writing it like language, so you're going to remember it as language. Plus you hear my voice. But then now that I've typed it on the chart, you might actually visually see it. And now you could remember it as an image. And now I'm going to appeal to the image and the language and the intellectual side of your brain. So I'm going to talk to three parts. I'm going to talk to almost like three different personalities that you own inside your gray matter. Okay? At the same price bears sell, bulls buy here. Now this is a puzzle, and your brain loves puzzles. Your brain loves puzzles so much it will create puzzles because it desires them. Okay, so how could that be possible? If bears sell here and bulls buy there, what happens? Well, it depends on the situation. In an overwhelming downtrend, bears sell here. And you can see I drew it out and everything, and by and large, it did happen. Twice. But then something might have fundamentally changed. Well, we don't know. That's a hypothesis. So we're talking about how do you conduct scientific methodology in your trading? Well, a bull would buy a higher low. Take it here, and if there are still bears, which means the fundamental hypothesis has not been confirmed, then more bears, the bears that sold here and the bears that sold here will definitely sell there. And they're like, it was just a rumor. China's not going to do enough. Oh, they talk the big talk, but it's not really going to have the desired effect. So some people are going to like discount the news, and they're going to sell it high. And we already know the price. Well, at least we think we know. And so now if you have control over your behavior, okay, that's what you're thinking. So a bull would buy here, and then they would say, well, it does matter. Things did change. And so we're on our way up here because it's a fundamental change, not a technical change. So this downtrend could be so last week. Oh, that is so last week. Oh my God, are you still doing that Aussie dollar short? Oh my God, really? Okay, so, but we don't know, right? This is why we have to measure, test, and reflect and adjust. So you should be deciding what your hypothesis is so you know how to employ your technical analysis. But we know most amateur traders, if not all amateur traders, are not even asking these types of questions. They're asking questions like, does my MACD say to buy or sell? That's foolish. That's not how you do it. And you know. Look, if that worked, I would just have an EA, an expert advisor, for my MACD to trade and make me money while I sleep. If it relied on your MACD, the difference between success and failure was in your MACD, I would not work a minute of my life, and I would every day get closer to becoming a billionaire. I'd be printing money while I slept. I'd be playing squash at the club with my other rich buddies with MACD. Hey, how much money did your MACD make for you today? Oh, another million. Oh, good for you, Knuckles. Yeah, but that's not how it works. So stop looking for that kind of answer. You can't make a spaceship go the speed of light. Stop trying. Instead, work on a warp drive. How do you get a spaceship to cross the universe without moving? Oh, you move the universe. The spaceship stays still. That's how you do it. If you had a warp drive, you'd hit the button like they do in Star Wars, right? You hit the button and the light would just go zip, but nothing would happen. You wouldn't be thrown into the back of your chair because you're not moving. you move space-time. It's called a warp drive. You guys want to know how to build a warp drive? What you do is you take, let's say, a heavy ball, like a bowling ball, put it on a piece of carpet, more like a rug, not a carpet. Okay? And put it on one side. Okay? So imagine you have a rectangle of, right? A runner, I guess is what they call them, right? You have a piece of carpet like this. Cool. Get a heavy ball, bowling ball, and put it here. Then scooch the rug. So now let's do a horizontal perspective. Now the rug looks like this. You get it? And then pull this side of the rug. What happens? Okay, now I got to go over here. Now the bowling ball is here. The bowling ball didn't move, but it's now on the other side of the piece of carpet. That's a warp drive. The spaceship didn't move, but it crossed the universe. Yeah, that's actually how you do it. Because it's impossible for a spaceship to travel faster than light. Now, there are things in the universe that travel faster than light. We found that. But the thing is, a physical object like a spaceship would start like a spaceship. Do you want to do a rocket? Okay. Okay. As it goes faster and faster, it gets longer and longer to the point where you're at the speed of light, and this is what your rocket looks like. And you're on the rocket ship with it. So you're a long, continuous line of atoms stretched out like that light when you see the spaceships in movies jump and you go, whoop, and you get this big, long light. That would be you physically in a long line of atoms. So what would it look like once you slowed that back down? I don't know what you would look like, but it'd be hard to put you back together, right? So anyways, you have to ask the right questions. The right question is, how do I get across the universe? Not how do I get the spaceship to travel the speed of light? And even if you could do it and survive it, it would take you far too long to cross the universe. You would die before you even got to the place you're trying to go. You would have to be on the rocket, survive traveling the speed of light, but you'd also have to, I don't know, have a baby, and then they would have to have babies, and then they would have to have babies. Then you'd get to where you're going. Then you'd have to experience whatever you wanted to experience. And then to come back to Earth, your great-great-great-grandchildren would have to have great-great-great-great-grandchildren who would have to have great-great-great-great-great-grandchildren to have great-great-great-great-great-grandchildren. And you'd get back to Earth 300 years later, and Earth is destroyed. So what was the point? So it's the wrong question. Cool. In Forex, you got to know the right questions, just like in science. Okay? And Elon Musk was talking about this the other day when based on his readings and stuff in philosophy, and he's like, you know, the meaning of the universe or the meaning of life is 42. And so, of course, you're like, well, what does that mean? You're like, well, the meaning is obvious. It's the number 42. You got to learn what questions to ask. Well, what does 42 mean? How did you get to 42? What are the things we should be observing? Like what went into getting to the answer to the meaning of life? If the meaning of life is 42, well, I just gave you the meaning of life. Now you got to figure out the questions. Okay. So, yeah. So again, what I'm babbling on about is most retail traders are just logging in, like many of you guys did today. You're like, I want to do euro dollar, dude. You're not observing the universe properly, and you're not even formulating questions. You're just habitually want to look at euro dollar, and you've missed the point that let's say like a trained scientist, PhD genius would look up to right? Let's say you're on vacation with this genius. It's you and the genius. Sorry. No, it's not you. It's somebody you know, your friend and this genius. They go to an exotic location. They're like in Fiji or something. And they're away from all major light sources, and they're just out on the end of the dock, way out on the water at night, and they're laying on the end of the dock looking up, and you can see the entire universe. And I've seen the entire universe so clear that you can actually see the Milky Way. I've seen the skies that clear where you can easily see the Milky Way. And so your friend, the non-genius, is just laying there going, oh, that's so beautiful. And the genius looks up and goes, holy shit, you see that one right there? That just happened. That's not supposed to be there. That wasn't there yesterday. Oh my God, you see it? I'm pointing right at it. Look. And you're like, dude, I just see a billion stars, but I can't see the one that's new. You need to be able to see that something in the universe changed. You don't trade euro dollar because it looks pretty. You change, you trade the forces of the universe, right? Like you got to see the next level at some point. And to do that, you have to ask the right questions. You got to stay in tune. You got to get involved. Okay. I was probably 12 hours late on that trade, but I spent 12 hours trying to catch it. And because I'm patient and disciplined, and maybe I'm probably lucky, I caught it. Sweet. But again, I was just lucky enough to ask the right question. Okay. If you recall the video I played, in the meeting last night, I said, look, this might be happening. It might be happening very soon. What kind of impact will it have? I actually don't know because I don't know what they're going to do. And I don't know how the market's going to react. And I don't know whatever they do, how long it's going to take and all this stuff. I just don't know. But I know it's happening. A star is likely to be born. And I'm going to do what I'm trained to do. And that is buy a dip on a roll reversal, kicking off of a 4-hour 21. And I got lucky. Sweet. But I'm sure glad we talked about it in great detail yesterday. And so thank you, swing traders. So now that we have these prices, let me sum it up and then we'll go on our way. When you look at these prices, these are what the prices mean. This is where the orders are. This is where institutional traders will be. And if they're not there, that is also informative. If bears don't sell at 66.50, then there are no bears. And if you were a bull and you bought plan A or you bought plan B, then you are going to make money. You made the right choice. Your hypothesis was confirmed by technical analysis. And your trading is just technical analysis, right? You're confirming or denying your hypotheses. And on many other pairs, you didn't even see. You got to be at the right place. Okay? When you're in a big city, staring up at the stars, you don't see 90% of what's happening. You're in the wrong place. Maybe at the right time, but you're in the wrong place. Yeah. And so you get a situation where there's your clean trade that I just did with you guys in today's event, just now in our live stream. Like, this is the cleaner trade. And now we have a lower low scenario, right? Look at, it did a simple roll reversal. Now we're kicking off the Lucas bands. Cool. Will it last? Oh, I don't know. I don't know the future. It's a wrong question. The question is, when did you enter? Where's your stop? When should you move it? Also, is it confirmed now? This is the one last question. Is it confirmed now? Do you now go into your bias pivots and go bearish? At what point do you turn bearish? Okay. Seems like if you turned bearish yesterday, so again, the swing trading group met here yesterday, and you said, okay, that's going to create demand for the Canadian dollar. That's going to be good for the United States. Good means weak dollar in the US, and a increase in demand means good for Canada. And you're like, that's a good, clean, healthy trade. Great. So how do I use the tools? How do I utilize my training? This is a selling price, but this is the best selling price. This is a good. This is good. This is best. So when do I get on the clue train? Up, 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 down, down. That's plausible. Up, 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 up. How about a double top on your best selling price at the open of trading in London? That's what that is. That's London Open. Okay. London lunch. New York Open. Is this what's going on now? I don't know. That's for you to decide. That's a hypothesis. And now you do your technical analysis to confirm or deny your hypotheses. And I think if you put together your trading process like this, I think you have a better chance of success. I don't know if it'll make you a success, but I think you'll probably improve your chances of success. QuantBox will help you. Investor Bootcamp will help you. FX Bootcamp will help you, and you should use Trader's Way. If you want a free virtual coach, you can't afford a human Forex trading coach, then use my free. I created one for you. Use to teach you technical analysis. That's tradeplans.ai. You should use them. It's free. Not for me. You're going to use it. I will get a bill. No joke. The more you use it, the more I get a bill. Yeah. It sits over on Amazon Web Services. The more it thinks, because it's giving you feedback on your trade plans, I get a bill. It's pretty interesting. I have to feed it. Yeah. So anyways, I have to go. That was real. Oh, hey, one more thing. That just happened.